Day. Wanted to do another whiteboard episode about your 401k versus you investing in real estate. And then, the overall goal is to accumulate more Bitcoin. So we'll go over to how I would, if I was working at a job and getting a 401k, how I would, stop doing that, put it into real estate to get cash flow. And I'll explain all this as well. And then I will put that into Bitcoin, as I just mentioned. But before we get started, if you guys want $10 free Bitcoin, head over to swanbitcoin.com/Bitcoin Chris. Get your $10 free Bitcoin. Set up automatic reoccurring purchases, guys. Automatic DCA. You can start to buy automatically on autopilot. That way, when Bitcoin goes up, you're not trying to FOMO in. You already got some when it goes up. You got some when it goes down. You just dollar cost average. And then you have an overall average accumulation cost of Bitcoin. So if you have not watched that Bitcoin video, I did a really simple explanation video on my YouTube video. If you haven't watched that, make sure you go watch that. So make sure you guys head over to swanbitcoin.com/Bitcoin Chris. Second sponsor is Colorpop. If you guys are looking to, you know, get your hair looking good, get your nails looking good, get your skin looking good, get you some Colorpop. So shout out to Colorpop. If you use the word 30, you can get 30% off. So if you guys want to go do that, go do that. And that's colorpop.com, or scan that code right there. Colorpop.com. Shout out to Colorpop. And then last but not least, new book on the way, Bitcoin Dad, Fiat Dad. Make sure you guys go pre-order my new book. You can pay in Lightning Network or pay via Bitcoin, via, the regular network or the Lightning Network, or you can pay in fiat. So now that we got the sponsors out the way, let's jump right into it. I'll actually leave that up. I'll leave that up for you guys just a little bit longer. Or you can go to, if you don't want to scan that, or if you're not able to scan that, go to bitcoindadfiatdad.com. And that's bitcoindadfiatdad.com. All right, I'll put that up later on. All right, so let's jump right into it, guys. 401k versus real estate. So we're going to jump into that. We're going to jump into why I think 401ks are trash and why real estate is a better option. And of course, Bitcoin is a better option as well. But, I'm going to explain why I have shifted my investment ideas and my investment strategy into real estate first and then into Bitcoin, okay? Which I've explained in previous videos, but I'm going to break it down here again. So let's jump into 401ks, guys. So a lot of us are told, oh, make sure you guys go get a job and, get your 401k and do the max contribution, and the job matches you 3%. And, it sounds good until you get into the details, right? So we'll jump into the pros, because there's not many pros, to the 401k. Then we're going to go into the pros of real estate and the cons of real estate, and also the cons of 401k. So we're going to jump into all of that. And then again, I'll explain why you should diversify that income into Bitcoin. Excellent. So let's jump right into it. So let's jump into the pros first for the 401k. So your 401k, the pros are, you do get matching. Your job does match. I think they match up to 3%. Which is all right. It's a baby incentive, I guess. It sounds good on paper, and it's better than no percent. So I guess you can look at it that way. So, sounds good. They match you. Cool. That's your pros for 401k. Whatever you put in, they match you. I think you can put in 19,500 per year, pre-tax money. So, that's another benefit, right? Pre-tax. So pre-tax money, let's see here. You can use that money in the future to, it can be seed money, right? To invest in other things if you are like me, right? What I did was I took out my 401k years ago and I bought Bitcoin. It was the best decision I ever made, even though I got hit with a fee, right? That fee It didn't matter because Bitcoin went up so much in that period of time. It didn't matter. So that's what I did personally. And again, it was one of the best decisions that I've ever made. It's really about, you can't really time the market, but I guess I got in at a great time. I did my research, did my due diligence, and it paid off well. So you can use it for seed money if you decide to take it out or do whatever, but that's going to go with the fees if you decide to take it out. So that's a negative. But it's money that you have, right? It's for you to retire on, but it's not going to be enough for you to retire on, especially with inflation, in my opinion. But we'll go into that with the cons. Another pro is you get 4 or 5 up to 6%, right? Growth. So you got some pros here. You got some pros. However, we're going to look at the cons, and we're going to see where's a better place for your money, because that's what it's about, right? Putting your money into a place where it's going to appreciate the highest, or do it's going to do the best that it can, right? The best opportunity for your money, right? So you don't want to just put it in a 401k when you can put it into something else such as Bitcoin or real estate, because that's going to do better over time versus a 401k. Okay. So let's jump into the cons. All right. The cons of a 401k. The first cons is taxes. You are going to be taxed at the highest rate when you decide to take out the money. Whenever you do get a chance to take out the money, you will be taxed at the highest rate possible, unfortunately. So that's a con. Strike one. Strike two, it's tied to the stock market. So even though the stock market has been, it's been doing pretty good the second half of this year, right? Actually, it's been doing good since the beginning half of this year. So it's tied to the stock market. You can see your returns go up. It will look good, but also same thing when the stocks go down. That means your overall savings will get tanked. And I've seen people complain, and I've seen people cry about their 401ks going down, going down, going down, because when the stocks go down, your 401k goes down. So it's not like a see, it's not like a life insurance policy where you can get a cash value life insurance policy where you can put your money into that vehicle, right? Because that's another vehicle you can put it into. If you put it into a cash value, life insurance policy where it grows, probably around the same, maybe even more than this, right? It's probably 7%. But it's also tied to the stocks, but with a cash value life insurance policy. When the stock markets go down, it doesn't. Your value of your policy does not go down. So, that's just a side note there. But this is tied to the stocks. So if your stocks go down, this 401k goes down, and you will be hurting. You will be hurting, hurting, hurting. All right, next con. Next con is fees, right? So as I mentioned, as if you're using it for a seed account, or if you have an emergency, or you want to use it for something else, right? Like I mentioned, I took out my 401k and invested into Bitcoin. I had to pay fees to take out my own money that I invested through the 401k program. So I had to pay fees for my own money, right? What kind of sense does that make? So that's one fee. Another fee is the brokerages that you're investing through, they have fees. So not only are you paying fees if you withdraw, the company that's investing your money, right? They also collect fees. So that's your second strike is tied to the stock market. Because if it crashes, so does your money. Fees, if you want to take your money out, it's your money. You worked hard for it. You put your money in. They're gonna take more fees out. And also they get fees whether your 401k does good or not. These people are still collecting the fees, so they're going to get paid regardless if your 401k goes up or down. Fees. So that's your third strike. Fourth strike is you earn what you earn is limited to the amount of money that you make, or the amount of hours that you work to fund your 401k. So you have to work to, put more money into your 401k. So your 401k is dependent on how many hours you work, and that limits the amount of money that you're able to put into your 401k. More hours you work, more money you get to put in. Less hours you work, the less money that is able to be put in. So we got 1 con, 2 con, 3 con, 4 con. 4 cons right here. Okay. All right. Now let's look at the difference, right? Let's look at real estate. Because instead of you putting your money into a 401k, I believe you should do something else with your money, because you can get higher than a 4 to 5% return on your money. And we have to use logic and simple math. Real estate, let's jump into the cons, right? In my opinion, there are no cons with real estate. And I'm going to explain why. Because there's always a strategy in a way with real estate that can benefit you. And then as well, 401k versus Bitcoin, no cons. There's always a strategy with this. This is long term anyway. It's going to go up way more than your 401k. Volatility issue is the same, right? Because you're going to have ups and downs with Bitcoin, but you're still going to have ups and downs with the stock market. But I digress. Let's jump to the cons. Cons for real estate. In my opinion, there's none unless you sell. And then when you sell, you have capital gains taxes. So that's the only cons. And I guess if you want to say if the market crashes, right? But guess what? If the market crashes, so is your stock market. So guess what? You're all in the same boat anyway. Bitcoin's going to go down. Stock market's going to go down. Real estate's going to go down. Everything's going to go down. So no matter what, you are going to inherit and have some risk no matter what you choose to invest in. However, in my opinion, Bitcoin, real estate, way better than 401k. Okay. So cons, you can say capital gains tax, short term or long term. That's why I don't recommend flipping. All right. And if you do flip, good for you. Pay your taxes. Okay. Unless you have it structured to your LLC, and then your LLC is owned by your trust. We're not going to dive into that conversation today, but pay your capital gains. Other cons is market crash. I mean, again, market crash is here. Same here. And market crash for real estate doesn't really. You're not going to lose 50 to. Well, you could lose a lot, but I think you could still lose more risk in the stock market versus real estate, as well as Bitcoin, because Bitcoin is very volatile as well. So you gotta be able to handle that risk, right? You have to understand what you're holding with Bitcoin first and foremost, or else you're just gonna sell. All right, so that's enough for the cons in real estate. I'm sure you guys could be pessimistic, right, and come up with some more cons, but I'm gonna be optimistic and say that's it for me, in my humble opinion. The next is real estate pros, right? So the pros are cash flow. So if you are saving in a 401k and you're making 4 to 5%, that's all good and dandy. But again, you're not able to see this money until you retire. So let me add that on here, right? You can't even touch these funds until you're retired. So if you can't touch this until you're retired, then you're pretty much SOL, which is fine. That's what it's for. It's for your retirement. However, with real estate, you can cash flow and start to use that money or save that money or reinvest that money right away. So that's why I tell you guys, look into multifamily and apartment complexes, because you can cash flow. And with the cash flow, you can then invest into other assets, and then You know, if you own this property and it cash flow and you do this smart, which is why I try to educate you guys on, you know, what to do with your capital. If you're cash flowing in a real estate property or an apartment complex, right? You own that apartment complex, guys. That means you're going to have it forever. And you can pass it down to your family and it's going to cash flow forever. The great thing about cash flow is that, you know, you can raise rents. We all have to pay higher rent. So guess what you can do? Raise rents. Once you raise rents, guess what? That means more cash flow. Jumps into the next topic, taxes. I went over this in my previous videos. There's something called cost segregation study. You can write up to 30% off of the purchase price of your real estate property in the first year. That means you get a tax refund if your cash flow, I mean, the deals I'm looking at are multi-million dollar deals. So, you know, you're getting, we're getting like the most recent deal I'm looking at is a $800,000, you know, it's a 800,000 just regular cost. It's just depreciation, and accelerated depreciation is cost segregation. So when you do cost segregation, you're just taking out the depreciation faster. But in real estate, you can actually depreciate 27. You can depreciate the asset over 27.5 years. So you would divide the asset divided by 27.5. Okay, and that's how you get your depreciation on what you can write off for your property. Okay, and the reason why that's like that is because that's the law, the taxes, the tax law, and the IRS says that you can do that. So do it. So back to what I was saying. You raise the rents, you have cash flow, you own the property, you have tax benefits, right? So tax benefits, as I just said, you have what I call and what everyone calls, right? Depreciation. Divide the purchase price divided by 27.5, which is the years, that how many years you have to write off the entire property. Or you can accelerate it and do cost segregation study, and you can write up 30 to 40% of the purchase price in the first year, which would alleviate any of your income tax from your job, and then also eliminate the taxes from your cash flow. And that's why real estate is dope. Okay. Now, what I would do is I would use the cash flow from the property to buy Bitcoin, and then Bitcoin would multiply and go up over time. Meanwhile, I still own an asset that pays me cash flow every single month, still get taxes tax free, right? Still get it tax free. Could still use that money to pay for everything else. Can use the money to buy another asset, and the cycle continues. But wait, there's more. Did you know that you can refinance the property? It's called cash out refinance. I'm sure you guys have heard that, right? You should have heard about it. Cashing out refinance. So let me just give you guys an example. Again, the this one of these deals that I'm looking for equity in is about, it's a $22 million deal, but I'm trying to negotiate the deal for 20 million. God willing. All right, so it's a $20 million asset, and what I'll do is I'll show you guys the taxes that we can write off, and then I'll show you guys the cost segregation study for that, and then I'll show you how much you can refinance on the property as well. All right, cool. So let's jump right into that. So the property I'm looking at is 22 million, but I'm gonna try to negotiate the cost of 20 million, and we can divide that by 27.5. That was 22 million. Then we got the 800,000 that I was telling you guys about 27 point. Yeah, see. So that would mean if every year on the property, because it's 22 million, you could write off 800,000, and then the cash flow is, it's in my, I have a spreadsheet on it. I don't have the spreadsheet pulled up right now, but I think the cash flow is about 300,000 to 200,000 a year for the property. Yeah. So yeah, you can write off 800,000 a year on the property. If you wanted to do cost segregation study on the same property at 22 million, you can do that by 30%. We'll just do that. You could take a $6.6 million tax write off if you wanted to accelerate the depreciation on the property, which is crazy. Crazy. So, anyways, back into the refinance, right? So you can cash out refinance. Like I said, when you raise the rates, you raise your NOI. When you raise your NOI, you raise the value of your property because you're receiving more cash flow. That means it's worth more. So the property is worth 22 million. Let's just say it's worth 25 million by the time we want to refinance, right? We can do 75 to 80% LTV loan to value. We can borrow 75 to 80% of the new value, which is 25,000, because we raised the rents, we had the property for a while, we added little things to make it worth more, all that good stuff, which raised the NOI. When you raise the NOI, it's worth more. When it's worth more, you can go to the bank and say, hey, I want a loan based on the new NOI, net operating income, and then you can do cash out refinance. Let's say we did all that. It's been a couple years. We've been cash flowing for a couple years. We've been raising the rent, all that good stuff. We got our tax benefits for a couple years because we did either regular depreciation or cost segregation study. Now we're ready to refinance. It's worth 25 million. Now we do let's just do 75%. So now you get $18 million, 18,750,000 tax free because it's borrowed money. The tenants are paying it off. So now you got 18 million, right? If you partnered up and did the deal, with other partners, however much equity that you owe your partners, you pay them out, pay the old loan back, and now you got a new loan. But now you have 18 million, you know, tax free. And then again, you pay back your other investors. You can use that money to buy another property, start the cash flow, and do the cycle all over again. Okay. Now, with that type of money, of course, you could retire early. You could retire early. You're not going to be able to retire early with a 401k. And once you're done working again with the 401k, you have to work to fund your 401k. So once you're done working, the money that you have in there, now you start to spend that money unless you invest it when you're what, 65. I'm not sure the retirement age. 70. I'm not sure the retirement age. At that age, you're not really thinking about investing, and you just want to chill and relax. But you can retire early if you did it this way, and then you would have cash flow even when you retired. You retired, and then you still got cash flow. You can still invest, repeat the process, get more cash flow, get another property, do the same thing again. You got tax benefits, and then my favorite thing to do: leave Bitcoin for your kids. Buy some Bitcoin. Okay. I just mentioned that repeatable, so you can repeat this process, especially when you cash out refinance. So when you cash out refinance and it's repeatable, you just start the process all over again. And now you got two apartment buildings cash flowing. You can write off taxes. You can refinance the second property and repeat the process again. And that's how you get three properties. So how you get four properties, etc., etc. And then we already talked about appreciation, which is what I was saying. When you raise the rents and you fix it up and you make it better, right? The property appreciates over time, even though you get to write off depreciation on the property. See, I never knew these things, guys, and that's why I want to tell you guys and show you guys. This is how you play the game. This is Monopoly in real life. I don't recommend you do Start where you can start, but if you can get a quad, start with a fourplex, start with a sixplex, eightplex, 10 unit. Start somewhere. And then now you're in a much better position than if you would have had a 401k. So now again, what I would do in this position is I would take the cash flow and the refinance money, put that into another asset, such as another property or into Bitcoin at this point. Because Bitcoin will go up a lot more than your real estate property, but you're not getting real estate for the value appreciation. You're really getting it for the cash flow and the tax benefits. That's what I keep trying to tell you guys. You have to understand what your goal is. And the goal, in my opinion, if you're trying to retire and you're trying to, set yourself up to, not be working all the time, in my opinion, then I would recommend you do real estate for the cash flow and tax incentives and tax benefits. Take the money and the cash flow from the tax benefits and from the cash flow, and then buy Bitcoin, because Bitcoin is going to go up to, it's going to continue to go up. This would allow you to have cash, pay your bills, retire early, tax benefits, refinance, capture appreciation. You can repeat the process, retire early, and still buy Bitcoin, and still buy your house, and still go on vacation, still do what you got to do, still live your life. And then now you have money, cash flowing into Bitcoin. So you take a nice chunk of change and you buy some Bitcoin or your DCA, dollar cost average. Pen is dying, dollar cost average, DCA. Right? And then when Bitcoin goes, Bitcoin could double and triple like that. I'm sure you guys have heard of BlackRock. I'm sure you heard of Fidelity. I'm sure you heard of, El Salvador mining Bitcoin. A lot of these things it's really like a perfect storm for Bitcoin. So right now would probably be the perfect time to accumulate some Bitcoin. However, the reason why I say do it this way is because you would have, again, tax incentives, cash flow to buy the Bitcoin. Because God forbid you had an emergency and you had to sell some Bitcoin, then guess what? Now you're paying taxes. Versus you have cash flow, tax benefits, buy the Bitcoin. If something happens, you have cash flow. You can refinance. You got a nice chunk of change. You don't have to sell your Bitcoin. And until we can borrow against our Bitcoin, refinancing via real estate is the best way, in my opinion. Okay, so I actually have a meeting. I got to get to. It's it's at 8:25 and it's 8:28, so I'm a little late, but I want to go over the benefits of 401k versus real estate. I got a real estate meeting right now, actually. So with that being said, this is Bitcoin Chris checking out. Make sure you head over to swanbitcoin.com/Bitcoin Chris. Pre-order my new book, Bitcoin Dad Fiat Dad, coming soon, or go to bitcoin-fiatdad.com. And then also make sure you guys go to collarpop.com and use the word 25. You get 25% off for your hair, skin, and nails. Men and women can take this. I take this every day with my smoothies. So shout out to Collar Pop. And with that being said, Bitcoin Chris checking out, guys. Peace.